Good morning, folks, and welcome to Stock Charts today for the 7th of March. Let's kick things off with an observation that I made yesterday with regard to the US dollar. Then we'll talk about its impact and how the major averages are poised to open up this morning. To today, where you have gold up and the dollar, back to the 4-hour chart, is down slightly. And I mentioned on that clip from yesterday that we were forming a head and shoulders setup. Left shoulder, head, right shoulder. This is the very same neckline from yesterday. And you can see that we are selling off the highs of the day. Is this anything to trade off of yet? No, absolutely not. We're not going to bet which way the dollar is going to go. We're going to respond to the break or the breakout of the US dollar by adjusting our gold mining positions as well as silver. So that's this morning's observation. That was from yesterday, and at that point in time right here, we had broken out above this upper band of resistance. And sure enough, we broke support yesterday as anticipated. Now, our positions that do well when the dollar drops, they did well yesterday. Now, after hours yesterday, we had an announcement out of Washington, D.C. that Gary Cohen, the chief economic counsel, had resigned. It was widely anticipated. I don't think necessarily a great shock, but apparently the markets are not taking it well, and the dollar sold off. Gold rallied. However, in the case of gold, let's go to gold right now. Gold did pull back off the highs of that knee-jerk reaction. I spoke with members last night on Market Wrap. I encouraged them not to go adding to our gold mining trade after hours because I was concerned about a pullback, and sure enough, we got the pullback. Now, is this the pause that refreshes before we move higher? Quite possibly, because if the dollar continues to head lower, gold should continue to head higher. The question is, why? And while we could point the finger at why and saying the Trump administration this and inconsistencies that, it all comes down to the economy, interest rates, and the willingness for traders to accept risk. And this market is very quickly becoming a risk-off environment. In fact, we booked profits in 3 positions this week alone. And I'll go over those charts in a moment. Now let's talk about catalysts. At 8:30 a.m. Eastern Standard Time, we have the ADP Jobs Report coming out. That is the precursor for the Pimp Mac Daddy of all economic data that is coming out on Friday, which is the government number, non-farm payrolls. Folks, both of these numbers can move the market. If you get a very strong number, expect the market to sell off. If you get a weak number, expect the market to rally. It all sounds counterintuitive, but it all comes down to interest rates. What does the report imply that the Federal Reserve might or might not do? That's all traders are thinking about. So keep an eye on those. Reports. Members, we already have a strategy formed with regard to how we will respond to what we report one way or the other. So more to come. The bond market, when bonds rise, as you're seeing right now in this 4-hour chart, interest rates are under pressure. So on this 4-hour chart, you're beginning to see a breakout of this triangle formation. It's very early in this 4-hour period. A lot can happen between now and the market open. So nothing to trade off of, just an observation. Let's talk the equity futures. The S&P 500 is off the lows of the morning. They were lower about a little over 1% on the morning. They're attempting to rally back. You can see this gap that opened up on the Gary Cohen resignation news. Watch this line in the sand here. It's critical because if we break to new daily lows, I am of the belief and have been of the belief that we need a retest of the February lows for this market to continue higher. Is it a must? No. Is it a good thing for the market? Absolutely. But if that support level breaks, you're going to see a floodgate of program selling. Now, I will caution that we do have a head and shoulder setup here on a 4-hour chart. Left shoulder, head, right shoulder. Here's the line in the sand in red on a higher level view. On a shorter term view, here's our line in the sand. If we break down below to new daily lows, in all probability, we're going to retest the neckline of this head and shoulder setup. So just be careful today. The NASDAQ 100, again, you saw an opening up on the news of the resignation. We are rallying back off the lows of the session, much as what we have on the S&P 500. We have here on the NASDAQ, left shoulder, head, right shoulder. Here is our neckline. The Dow Jones, again, here's our neckline on this head and shoulder setup. If we break it, we're coming all the way back down here. Now keep in mind that the trend line that formed from the February lows to the lows from the 1st has been broken. So we are putting in lower highs and poised to continue to put in lower lows. So a big warning flag is on the track, which is why I have been coaching members to look to build cash positions and quite possibly to get ready to short this market. Let's get to member stock chart requests. This is where we review the symbols that our members submit for me to review. These symbols will be listed. If you watch this on YouTube, they will be listed in the video description area below. And if you watch this on the website, they should be right in front of you there. Okay, the first chart up, CRE, weekly chart. A beautiful breakout this week above resistance. I will caution on a weekly and for that matter on a daily basis, we are leaning into the 3rd standard deviation Bollinger Band. Does that mean it can't head up to prior resistance up at 44.52 before pulling back? No, it can, but just expect a pause fairly soon and a slight pullback. Volume so far this week, and it's only, we have 2 trading days booked right now. We have 3 more to go because it's only 5:20 in the AM Eastern Standard Time. Volume so far this week is very strong. Now, if you're looking for a stop, I would look to stop out if we pull back on the week and close back down below the support level, because that would be a breakout point failure. Now, what I'm loving here is this beautiful multi-year base that we are breaking out of, and it's an inverted head and shoulder setup as well. Left shoulder, head, right shoulder. We are above the neckline as we speak. Let's just make sure that we appear poised to close out the week above that level. Daily chart. RSI rising, Stokes are rising, obviously price rising. We have a breakout. Volume was outstanding yesterday. I'm loving the chart. I think it's really, really good. The only concern I would have is the health of the overall market. I wouldn't want to fight any weakness in the market, so just be careful with all of these stocks to the long side. Remember that we have record high margin debt. So while this is a beautiful chart, it's a work of art, I would go as far as to say. When the margin calls go out, indiscriminate selling begins. So just be careful. PayPal, weekly chart. I have a bit of a concern here. The concern is that we have a head and shoulder setup forming. Left shoulder, head, right shoulder. Here is our secondary neckline. If we break down below it, in all probability, we're going to retest the primary. Now, when do I change my tune here? Well, I think you can probably get long if you wanted to today. Just use a stop right below this support level here at, let's call it 77.25. Keep that loss small. Daily chart. You can see here again, we have a head and shoulders setup. Left shoulder, head, right shoulder. Here's our neckline here. Yesterday, we managed to slightly close above resistance. I would be a buyer on a rally to a new daily high, assuming that the market is not falling apart. If the market is falling apart and PayPal is displaying relative strength, I wouldn't bet that the relative strength is going to hold up if you're seeing big volume bars on the major indexes. Now, Stokes are hooking up. RSI is hooking up. The chart looks good, but remember, all of these charts were prior to the Gary Cohen resignation. And again, it's not about him in and of itself. It's the environment that we are in. We have tariffs being discussed. We have trade deals being renegotiated. Gary Cohen was viewed to be a balancing personality. Gary Cohn was viewed to be a moderate voice within the Trump administration, and he's now gone. So that's what this is all about, the environment that we find ourselves in now. All right, let's talk about positions that we took off this week, but we're looking to put back on. I'll talk to you about why we book profits here. EDC, emerging markets, we opened up the position last Friday. We booked profits into resistance yesterday. Did we get out the top? No, I don't want to. No, I do not want to make that claim that we got out the top, but we certainly, the first chart up being EDC, we opened up. The EDC puts you long of emerging markets. We opened up a position on March the 2nd due to a bullish key reversal. Then on Monday, we had follow through. Yesterday, more follow through. We booked profits up and into resistance. Now, I may regret selling this position because the dollar is weak. That's good for emerging markets. I will look to buy this position back on strength. Now, the banks, we put on a long position on Friday, again, because we saw a bullish key reversal off of support. We rallied on Monday, and we booked profits on Monday, very close to the highs of the day because we were at resistance. LABU puts you long of the biotechs. We opened up a position on Friday on a bullish key reversal. It rallied on Monday. We booked profits up and into resistance. Why are we selling our positions into resistance rather than waiting for these stocks to break out and proceed to new all-time highs? The reason is that while it's quite possible that they break through resistance, this is not a home run market, meaning I'm not buying stocks betting that they are going to break through resistance. I'm playing this game for singles and doubles right now until we're able to break out above resistance levels that give me the all warm and fuzzies. I don't have that right now. What I see in this market is a ton of indecision. And that is what I'm coaching members towards, is playing a defensive game, a short-term game. However, as we see the dollar weaken, we are poised to add to our dollar-sensitive names, meaning those names that are poised to do well on a weak dollar, we're adding to for the long term, or looking to add to for the long term. So if you're not currently a member, sign up, because so far this week, while the market's been mixed, we've done quite well. Folks, keep an eye on the economic data that is coming out at 8:30 Eastern Standard Time. It's a market mover. If it comes out benign, meaning meets expectations, expect a pause in the market. And if you're wondering why we're getting a pause, why there is no volatility, it's all because of Friday's job numbers. Again, that's the pimp Mac daddy of them all. Why is that? It's because it's a dinner table item, much as the issue of rising inflation of food and energy is. People talk about it around the dinner table. What's coming up? Midterm elections. And the last thing the Republicans want to deal with is an economy that is slowing down and jobs being lost into the midterm elections. What will traders read into that? Because that's how I view it, and I'm pretty good at it. How will traders view a weakness in the jobs numbers? We'll discuss that tonight on Market Wrap with members. Everybody have a great day, and I will talk to you tomorrow. Be well. Members, I'll talk to you tonight. And everybody have a profitable trading day. Be well.